by the lake. Much simpler set of facts. Let's say you're a building contractor, and you come to me and say, I'll contribute my services as a building contractor in exchange for my partnership interest. I'll build this office building for you if I become a partner in the partnership that owns the building.
For
Okay?
how much?
Now, your normal fee for these services is 400 grand. But if we were to estimate the fair market value of your partnership interest based upon the value of the property, your partnership interest is 500 grand.
Okay.
Two questions. Number one, do you recognize income?
Yes.
And if so, how much?
My income would be the same as the outside basis I would get from contributing.
So would you use the 400,000, the normal value that you value for what you would charge other people, or what the partnership interest is worth based upon the value of the property?
It depends. It depends.
The larger.
Which one? 400,000, 500. You got a 50-50 shot. Which one do you use?
500,000.
I use the 400.
Okay. The rule is you use, if you can estimate. These rules are kind of like legalistic in a way, because what if you can't value the building? Actually, real estate you can usually value. You can get appraisers to come in and say, minus the mortgage, and you can calculate what every partner, if you're a one-half partner, and the building's worth $1 million, and you got a $500,000 mortgage on it, your net your net equity in the building is 500,000. If you own half, then your partnership interest is valued at 250. So the bottom line is you're supposed to use the value of the partnership interest to the extent you can determine that. What you normally charge other people is not what you would use.
You would use the
Unless it's a kind of asset that you can't value. If it's a partnership interest that you can't value, then that might be an easier thing to determine. Okay?
So the first option to see how much income I will recognize would be to use the
So based upon the
estimated
facts I
value,
gave you, what is it? How much income are you going to pick up?
530.
500. Okay.
Or was it 500?
All right. Now, you use the estimated value of the partnership interest. Now, you're picking up 500 grand in income. What is your basis in your partnership interest going to be?
500.
500,000. Now, that's your side of it. That's the partner side of it. What's the partnership side of it? They've just given you, in essence, a payment that's worth $500,000. How does the partnership record that $500,000 on its books? Is it a guaranteed payment to partner? Is it a deductible expense? Or does it need to be capitalized?
Capitalized.
What was the
Say,
question again? Can you repeat the question again? What was the question?
500,000, you got a partnership interest worth 500,000. So that's just like the partnership paying you $500,000 for
Correct.
services. Can the partnership deduct that as services? As a guaranteed payment to partners? Or is it the kind of expenditure that needs to be capitalized?
Is the building that I'm constructing for their operations, or are they gonna sell it?
It's an investment. You're building a building to rent to tenants.
Okay. So it would be.
It's very, don't make the question more difficult than it is. Either you capitalize it or you expense it.
You would capitalize it.
Flip a coin.
Capitalize it.
Okay, you're going for capitalization, and your rationale for capitalization is?
It's because it's part of the cost of the asset that's being built.
There you go. Thank you. That's all I was looking for. Okay? Remember, there's a whole bunch of assets or a bunch of services that people provide. If I'm an attorney and I'm, doing eviction services for deadbeat tenants, do I have to capitalize that?
No.
No. If I'm drafting a partnership agreement,
Yes.
it would be called a what?
Organizational.
Organizational cost. Okay?
Wait. Don't you-
Or a startup expenditure. Okay?
Don't you get to expense those up to a limit? 5,000 minus the difference between
Yeah,
that
there's-
and
yeah.
the 50.
Basically, if
50,000?
the organizational costs are over 50 grand, you end up having to capitalize the whole thing.
Yes.
Okay? All right, next question. Let's see. This, I think I'll put a little up here. Okay. Do you remember the rules regarding tacking of holding period? What do we mean by holding period? Like if you're gonna hold, you buy your partnership, you acquire a partnership interest, we gotta determine a date upon which your partnership interest is deemed to be held. Why is that important? Because if you held it more than 1 year, it could be a long-term capital gain. If it's less than a year and you sell it or dispose of it, it would be short-term capital gain. If you contribute an asset to a partnership in exchange for your partnership interest, when does your holding period start? The date you contribute the asset, or the date that you acquired the asset that you're contributing? Now, how do you determine issues like that? I tell all my corporate students that if gain or loss is not being recognized on that transaction, there's tacking of holding period. What do I mean by tacking of holding period?
Means that there's still taxes being imposed on for me or not charged for the company.
Tacking of holding period. What does it mean to tack?
The partnership
Shit.
hangs on or counts the partner's holding period of that asset as your own.
Right.
So like the partner's
Okay.
holding period of that asset or that contributed asset, it starts when the contributed partner had it.
Right. So tacking of holding period means your holding period wouldn't begin the date that you acquired your partnership interest. You would tack on the holding period of the asset you contributed to get the partnership interest. Okay? Now, there are transactions where you tack holding period, and there are transactions where you do not. The bottom line is, when gain or loss is recognized in a transaction, usually there's no tacking.
Which one?
On the other hand, if it's a non-taxable event, like a like-kind exchange, there is tacking. So here's the question. When you're contributing an asset in exchange for a partnership interest, is that usually a taxable transaction?
No.
No. So is there gonna be tacking?
Yes.
Yes. So going back to my original question. When does your holding period of your partnership interest begin? The date you contributed the asset, or the date you acquired the asset that you contributed?
That one.
That, yeah, I don't even know if I could repeat it myself. That's what tacking of holding period means. Everybody understand that? Okay, let's move on. What that means is if you acquired the asset, let's say you acquired your partnership interest January 1st, 2019. That's the date you contributed the asset. But the date you acquired the asset was June 30th, 2018. What would be the date when your holding period of your partnership interest begin?
January 1st?
June 30th, 2018. The date that the actual contribution took place becomes irrelevant. Okay? All right. More simpler, straightforward question. Remember, we were always talking about what's included in your distributive share. And how many of you have actually studied Schedule K or K1 and looked at all the different items? 2 of you, 3 of you. Okay, do it. You're going to be at a bit of a disadvantage because you haven't done it. The question is, the bottom line number, if you look at the bottom of page 1 of 1065, the partnership ordinary income number. Does that include or exclude separately stated items? Exclude, correct. So, here's the question. Which of the following is included in the bottom line ordinary income partnership number? Ordinary income partnerships. Question 1. Municipal bond interest. What I'm basically asking you is it a separately stated item? In which case it's not included. Or is it not a separately stated item and included in the net income of the business? Municipal bond interest. Would that need to be separately stated?
Yes?
Yes. Why? Because it's tax exempt. How else? If you bury a tax exempt item in the bottom line number of what you're going to pay taxes on, then obviously it's going to throw the calculation off, right? Same question. Dividends, income received from a domestic C corporation. Separately stated item or included in the bottom line number?
Excluded?
Dividends received. Think about a 1040. Where do dividends go on 1040? What schedule?
B.
Correct. Have you had any experience preparing 1040s yet? Probably not. All right, that's why you, okay. It's an unfair question for people who are not familiar with the forms. Dividend income is investment income, so it's not going to be buried in the trade or business number. So that's a separately stated item also. What about long-term capital gains and losses? Is this a separate line item? Is there a separate line item for long-term capital gains and losses on the K1?
Yes.
Yes.
So it's a separate stated item, so it's not going to be included there. Okay? Now, here's the curveball of the day. What about a net operating loss carry forward? Let me ask you a basic question. Can a partnership ever have a net operating loss carry forward?
No. No.
Okay, no, that is correct. Use your common sense. Why not? This is one of those things when I tell you the answer, you go, oh.
Oh, because it's a pass-through.
There you go. Excellent.
Because
See,
it's a
if you
what?
think about it,
Pass-through entity.
ladies and gentlemen,
Okay.
you need to think that through. See how you thought that through? The answer was there. It was rather obvious, but you got to think it through. The only entities that have net operating loss carryforwards and carrybacks are C corporations. S corporations don't have that, partnerships don't have that. Trust and estates kind of have it because they're kind of like a hybrid between a pass-through and a non-pass-through. That you'll have a separate course on that. Okay. All right, so there's no such thing as a net operating loss carryover or a capital loss carryover in a partnership. See? All right. Similar veins, your turn. Again, the same question. What items are included in the ordinary income line of the partnership? True or false? Foreign income taxes paid are included. False. Is that a tax deductible item? Yes. But it's separately stated, correct? Okay, yes, you were right. It's separately stated. Now the next question is, well, why? If it's a tax deductible item, why is it separately stated?
Because the individual taxpayer has to decide if he wants to take a credit for the foreign tax paid or if he wants to.
Yeah, the individual partner has a choice to make at the partner level. Is he gonna take the foreign tax credit, or is he gonna take a deduction on Schedule A? So they leave that decision to the partner, it's made at the partner level. So that's the reason why that one's separately stated. What about capital losses? Is that included in the ordinary income loss? Capital losses?
No.
Okay, you caught yourself there. Okay, you are correct. Why are capital losses separately stated?
We're only dealing with the ordinary losses.
That's right. That's right. And there's a special form where capital gains and losses go on Schedule D, a separate line of 1040. Charitable contributions. Is that included in ordinary income line?
No.
Are charitable contributions tax deductible? Yeah. Do they go in the ordinary income line, or are they separately stated? Separately stated because why? It's an itemized deduction. It's not part of ordinary income or loss. Now, the trickiest one is saved for last. Guaranteed payments to partners. First of all, is it a separately stated item?
Yes.
Yes. Is it included in the ordinary income line on line 22?
No.
Yes.
You would think not, that it's a separately stated item. This is the tricky one. Remember, all a guaranteed payment to a partner is compensation to a partner. It's deductible by the partnership, including, let's say I pay myself a guaranteed payment of $30,000, and I'm in partnership, the three of us, a third each. I'm gonna pick up $30,000 in compensation income on my personal tax return. But each of our three distributor shares are each gonna be reduced by $10,000 each. Because that guaranteed payment is a tax deductible expenditure to the partnership, just like I had gotten a salary. But as we know, partners don't get W-2s, they get guaranteed payments, okay?
The shareholders' distributions.
So, if it's tax deductible by the partnership as a expense, is it gonna be included in bottom line of ordinary income? Yes. It's a separately stated item that is included. It's the only one that I can think of. Generally speaking, if it's a separately stated item, Which, by the way, ladies and gentlemen, look at the Schedule K and the K1. You know, I don't know, I've stopped short of memorizing it, because there's a long list of items there. But look at all the items that are separately stated there, which ones are expenses and so forth. 9 times out of 10, that'll tell you whether it belongs in the ordinary income line or not. With the exception of guaranteed payments. Guaranteed payments are netted in partnership income. Okay. All right. Yikes. Moving far too slow.